What is up? What is up, guys? It's your boy Kev. Welcome back to New Stacks FX, and today we're going to be looking at gold. I'm going to be showing you guys how to trade gold, how to analyze it, and what are some of the mistakes that you should be avoiding when you are trading gold. Always, we're going to be starting on the weekly chart. From the weekly chart, it's always beautiful. I always say that it is always good to look at a bigger time frame just to get an overview of what the market has been doing. You can clearly see that gold has just been pushing up. So gold all the way from the 90s has just been very bullish. There were some corrective moves along the way, but generally gold has just been pushing all the way to the upside. And what we see right here, we can clearly see that it has reached these 5,000 areas right here, and this is the highest level that gold has actually gotten. Now, the best way to actually analyze gold obviously is to go deeper into what gold has been doing. Like I said, generally gold has been pushing to the upside and giving us nice corrective moves, pushing all the way to the upside. What we see right here is that we see a nice touch right here. There's another touch right here. Price pushed up, came back to this key area right here, and then it just started pushing up. Now, I know that there are a lot of people that are against trend lines, but trend lines are very key in showing you some of the key areas within the market. We do not use trend lines as entry signals, but we use trend lines to actually highlight some of the key areas within the market that you should be looking at when you want to continue with that specific trend. Trend lines are there to help you identify trends. So we want to see what is the trend within the market. Is the market generally moving to the downside, or is the market generally moving to the upside, or is price actually just ranging? So that is the key use of trend lines, and they are very useful in that nature. They help us identify trends, and we do not use them as entry signals. So what we see right here is that generally gold has been pushing up, and it also came to this key area right here. So you can clearly see that as soon as it came to this area right here, this is when it just started pushing up. So when I go onto the daily chart, you will see that price came to this level, this psychological level, and a lot of people just started buying and price just started pushing up. So what I'm looking to see on gold, since it has actually come to test out this area right here, just see what's going on right here. What I would love to see from gold is gold actually giving me more moves before I can decide what the market is going to be doing. Now, in the short term, I can always go onto the 4-hour chart. Let's go onto the 4-hour chart, see what's been happening. We see that price actually moved down, gave us a corrective move, pushed all the way to the downside, and right now it looks like price has given us a higher high and coming back from a higher low. We cannot confirm this to be true unless price actually breaks this high right here, comes back for another corrective move, and that's when we can actually confirm this to be a push to the upside. Again, bearing in mind that this could be a long term to the downside before we come back to the psychological level right here. But generally, I would want to see price breaking this high right here, coming back for another higher low before I can actually look to push with the market to the upside. Right now, it is not clear as to what price is doing. I always say that I look at clear and simple structures within the market. I look at what is obvious. Right now, it is not too clear what price is doing. Remember, money within the market is made from waiting. You want to wait for the market to give you the best setups before you can actually start looking to place trades. It's not about rushing to place the trades within the market. It's about waiting for the best setups, being extremely patient, and allowing the market to show you exactly what it is trying to do before you can start looking to place your trades within the market. So in this instance, I want the market to actually give me what I want to see before I can start pushing with it to the upside. I know what an uptrend looks like. I know what a downtrend looks like. I know when the market is trending to the upside. So in an uptrend, I know that we generally have higher highs and higher lows, and I'm not seeing that right now. So I want the market to give me what I know to be an uptrend before I can start buying and placing trades to push with it to the upside. So with that being said, I want the market to actually break this high. give me a higher high. When it comes down for another corrective move, that's when I will look to push with the market to the upside. But if the market actually comes to this key area right here, I would want to wait a little bit to see what price is going to be doing before I make a decision as to what I want to do. But if price continues to actually break above this or outside of this zone right here, I would then look for corrective moves to start looking for longs and push with the market to the upside. And again, you have to understand that this is just a textbook setup of what a long position would look like. But the market does not always move like that. The market can always create its own pattern. But as long as I understand the core concept of what an uptrend looks like, it doesn't matter if this setup gets created right here or it gets created somewhere right here. So the important thing is to understand the general movements of an uptrend and the general moves of the downtrend. And if the market is unclear, it is always best to wait for that setup before you can start pushing with the market wherever you want to push with it. I really hope that you guys learned a thing or two on how I actually approach the charts. This is by far the simplest way that you can approach your chart. Even for gold, you want to make sure that you look for these specific things before you can start placing your trades. This is to ensure that you prevent premature trades within the market and also getting stopped out prematurely within the market. If you enjoyed this content, do make sure that you like, subscribe, leave a comment if you have any questions. And as always, I'll catch you guys on the next one. Peace.